Good afternoon, Professor. I'm Aaron Slacombe, and this is my presentation of the financial analysis of BMW Auto Group, specific to the United Kingdom auto industry, the British auto industry. This is for the financial class here in fall of 2019. All right, so in my presentation on slide 1, we begin with the global perspective, the outlook, the international level. So right now what's currently going on is there's tensions in the Middle East. So this includes, the recent drone strike on Saudi Aramco's oil processing facility, recent seizures of ships in the Strait of Hormuz on the part of Iran, the Turkish invasion of Syria, and the global supply of oil hinges upon the political climate in the region of the Middle East. Then we also have tensions in the Asian side of things. So right now there's a lot of democratic protests in Hong Kong. There's the Chinese military expansion in Indochina, mostly the South China Sea, building man-made land formations, establishing anti-aircraft bases on those man-made islands. And then there's the current trade war with China, between China and the U.S. And then there's also escalating tensions between the USA and North Korea. On slide 3, continuing on with the international or global perspective, there's also some European tensions. So European countries are seeing a huge influx in immigrants from the war-torn Middle East. And then there's also Brexit, which is going on. So that's Great Britain recently voted to leave the European Union. That was a hotly contested vote. A lot of people are not very happy with it, and there's a lot of uncertainty around how that's going to play out. All right, on slide 4, I'm going to be narrowing in on the United Kingdom in particular. So this is a mature country that has existed for centuries. It's a relatively small island nation off the northwest coast of France. Population is currently around 66.5 million people. It is currently a member of the European Union, the EU. However, they recently took a vote to leave the EU, so that is still in the works. A little historical fact: the last time this country was ever invaded was in the year 1066. All right, so little analysis of the economy and politics of the United Kingdom. Is a free market economy and a constitutional monarchy. So what this means is, there is a royal family, but it's basically Parliament which runs the government. The top industries in the UK are the service industry, mainly the financial or banking industry, followed by manufacturing, then construction, and then tourism in that order. The GDP, gross domestic product, of the country is approximately 2.8 trillion US dollars. That's been relatively flat over the past 5 years. It did fall a little bit, so it was 3.03 trillion in 2014, and now it's kind of gone stagnant and fell back a little bit to 2.825 trillion in 2018. Slide 6, it is a free market economy, so as I said, the GDP per capita, while flat, has actually been increasing. So in 2014, it was roughly 40,000 US dollars per person, and it's increased every year since then. And then in 2018, it was $42,978 per person per capita. Slide 7, federal budget. The key point here is that the debt is increasing. So revenues hover around the $1 trillion mark. Expenditures are a little bit higher. So in 2018, for example, revenues were $1.045 trillion, and expenditures were a little higher at $1.086 trillion. That yields a deficit of $41 billion, and the federal debt currently stands at $2.3 trillion. The percentage of debt in the GDP is 86.58%. That has improved, in recent years. In prior years, it's been over 87%. So it's dipped below 87% and is going in the right direction. All right, on slide 8, we have some data on the exports and imports of the United Kingdom. So the first section, exports, shows that it's been on an increasing trend from 473 billion US dollars in 2014 to 818 billion dollars in 2018. And every single year you can see the exports and the imports. And you can see the imports is always a little bit higher than exports. This means that the country is a net importer of goods and services. So for example, in 2018, they exported $818 billion worth of goods, but in that same year imported $858 billion. So that was a net import of $40 billion. All right, so slide 9, we're going to talk about the monetary policy, the tax policies, and the exchange rates of the British pound to the US dollar. So, it is a constitutional monarchy and it is a free trade country. So inflation targets are set by the government, which is Parliament, every year. There is a committee called the Monetary Policy Committee that governs and sets the base rates, but they do have to try and hit the targets that are set by Parliament each year. The exchange rates are roughly 1.3 US dollars to 1 British pound. So it is the British pound is more valuable than the US dollar. However, that ratio has been decreasing. Just a few years ago, it was $1.65 per pound. Now it's fallen to $1.29 per pound. So it is still more valuable than the US dollar, but not as much as it once was. So the tax structure in the UK is relatively high: personal income taxes, value-added taxes, business taxes, and corporation taxes. How this affects us as investors is basically the more often that goods and services change hands, the more profit is lost to taxes. And this high tax environment is really detrimental to us as investors. So this increases costs of a company, and it gives a competitive advantage to those companies that are vertically integrated due to the internal movement of goods rather than changing hands from one to another. So there's less taxes involved because it's from one internal manufacturing site to another site. So there's not a tax associated with that exchange. Slide 10, we're going to look at the stock market and the bond market. So the total market value is very volatile on the stock side, while the bond market continues to grow at a relatively consistent pace. So you can see there's some dips and some growth on the stock side from 2013 to 2014. It increased by 0.7%. 2015 dipped 1.3%, increased 19% from 2015 to 2016, increased 12% from 2016 to 2017, and then fell back 8.7% in 2018. That was on the stock side. On the bond side, it's been relatively consistent. So 2013 to 2014, the bonds total value grew 3.48%. 2014 to 15, 2.98%, 2016, 2.7%, 2017, 2.15%, and then finally in 2018, 2.02. So you can see that the bonds, less volatile, more consistent, slow, steady growth compared to the stocks, which you may lose 7-8% one year, or you may gain 15-20% one year. Very volatile, but very inconsistent. All right, so the industry that I've chosen to analyze is the automotive industry. So on slide 11, a little slide there talking about the British automotive industry in general. It's very well known for its iconic luxury and sports cars, but there is also some mass production of economic and industrial use cars as well. So on this slide, we just have some of the famous British brands, which would be Rolls-Royce, Bentley, Jaguar, Aston Martin, Land Rover, and then there's some mass production of some economical cars such as Honda, Toyota, and Ford, and a few others. All right, so on slide 12, we show the industry growth, which is basically specifically the contribution to GDP of the automotive industry. So in 2014, this is in billions of dollars. So in 2014, the British automotive industry contributed roughly $20 billion. In 2015, $24.4 billion, 2016, $28.4 billion, 2017, $26 billion, and 2018, $24 billion. So it's been relatively stable, and it is a significant portion of the GDP of the country. All right, slide 13, a little bit of analysis of that industry. So most competition is within the premium or luxury vehicle arena. Most of these vehicles are exported either here to the United States or to Europe. There is much less competition amongst the industrial use or economical vehicles. Those are primarily limited to the following for industrial use: Ford, IBC vehicles, and Leyland Automotives. So on the outlook side, growth over the past 5 years has been positive overall, but it has retracted some in 2017 and 2018. And it is relatively volatile, so there's pretty large swings there. So overall, it has been positive over the past 5 years, but it has dipped some over the past 2. Trade with the rest of Europe is largely dependent on how Brexit turns out. And then on the outlook side, again, as world population increases, demand for vehicles will also likewise increase. So this dip in the industry GDP may be a good buying opportunity because it is positive overall. It has retracted some, so if you bought 2 years ago, you most likely lost money. If you bought 5-10 years ago, you made money. I think it's a good buying opportunity for someone who can afford to buy shares and hold for several years. So we're going to key in on one specific company that operates in that luxury vehicle arena in the United Kingdom, and that is BMW Auto Group. Now, I understand that BMW is not based in the UK. However, a large portion of their manufacturing occurs in the UK, and a lot of their products are sold there. So, a little bit of description of the company. Manufactures both cars and motorcycles. The majority of what they do is cars. So on that side, you have multiple different brands that are under that umbrella corporation of BMW AG. So that would be BMW, Mini, and Rolls-Royce. BMW Auto Group currently employs around 122,000 employees. There are 31 different manufacturing facilities, and they're spread across 15 different countries, mainly in the UK and Europe, but there are some in North America, I think 2. There's a couple in Asia and a couple in South America. The company is very diversified in that they produce vehicles in a full gamut, from economical, like the Mini Cooper, to very expensive luxury vehicles, the Rolls-Royce line, the BMW i8, really fast sports cars, those sorts of things. And they're also diversified in the types of engines that they use in their vehicles. They have gas, diesel, and electric vehicles. All right, slide 15, we're going to go into some of the financials of the company. So the stock price on slide 15 is shown 2014 through 2018. It has been slowly slipping over the past few years, and cash flows have been negative overall. So this further reinforces my belief that this may be a good buying opportunity for someone who can afford to wait a few years. Slide 16 shows the net income in billions of dollars. So net income has been positive in every single year. So the company has made money every year. It has been less money the past year than in previous years, but still positive. So they made $5.8 billion in 2014, $2.7 billion in 2015, $3.2 billion in 2016, $8.7 billion in 2017, and $2.8 billion in 2018. All right, slide 17, we're going to look at their assets a little bit. So this is going to be current versus non-current assets. So the ratio between those two has been relatively stable from 2014 to 2016 to 2018. So the bulk of that would be current assets. That's the red on that pie chart. You can see it's been relatively stable. The majority, roughly 60 to 65% of the assets have been non-current. Current. Slide 18, we're going to look at equity and liabilities. So this has shown a little bit of change, 2014 to 2016 to 2018. So that blue is the equity, the red is the non-current liabilities, and the green is the current liabilities. So you can see how equity and non-current liabilities in 2018 are roughly equal, basically 40% and 40% apiece, and then your current liabilities would be the roughly 20% that remains. All right, slide 19, profitability trends. So this is the increase or decrease trend of revenues, expenses, and incomes, which also is your profitability trend. So here you can see that revenues have been a little bit flat over the past 5 years, while the red line, expenses, has increased. And so this means that you've made less money. And so then you can see the green line is the net income, and that has decreased from 2014 to 2018. So revenues have been really flat, expenses have increased, and as a result, profits have decreased. We're still making a profit, just less than 5-6 years ago. All right, slide 20 is the cost structure of the company, and here's a pie chart. You can see that the red is the selling and administrative expenses, and the blue is the operating expenses. So the bulk of the costs year over year very consistently have been selling and administrative expenses. This is because not only is it a manufacturing company, they also do a lot of financial activities, lending of money, buying and selling of vehicles, not just the manufacturing. And so you have a lot of overhead, company overhead associated with that. So, in conclusion, this is a very reputable company. It's an industry that I expect to grow. The demand for products is going to grow, and they're well positioned in that they've done a lot of R&D into electric vehicles. They have some very successful electric vehicles already on the streets in the States and in Europe. They're becoming more and more prevalent. So I see that trend continuing, and I see BMW Automotive Group well positioned to take advantage of that. As world population increases, as more and more countries become more developed and have more disposable income or the ability to afford vehicles, I think demand is going to increase, and automotive vehicles, specifically BMW, are well positioned to profit from that. So I would recommend investing and holding for at least 5-6 years. All right, thank you.